everyone, and welcome to our YouTube channel, Moneyline with Nancy at TV. In case you're not a subscriber yet, please do subscribe. Just press the subscribe button as well as turn on the notification bell so that you can get notifications when we upload our videos. Don't also forget to subscribe and join, follow, like our other social media platforms. Of course, you're seeing it right about now. Don't also forget to share this video across your platforms. Enjoy the video. Good morning and welcome to another edition of Moneyline with Nancy. I am Nancy Naji. I'm not doing so much talking today because you will see a lot of talk in today's program. Just a few days ago, the World Bank launched the Nigeria Development Update. The Nigeria Development Update is launched twice a year, but because of the way the situation is in the country, they had to do this in October, and the World Bank Nigeria country office had a new country director that came in July. And of course, Dr. Ndiamit Gill, who is the senior vice president and the chief economist of the World Bank Group, was in Nigeria. So this was just an appropriate time to launch this report. So where am I going in essence? Today's show, we did all the talking in the panel session. So just take a listen to the panel session around the recommendations of the World Bank in the NDU report, as well as what the government thinks about the report, and government in terms of fiscal policy as well as monetary policy. I had an interesting panel. I moderated the panel. I had an interesting panel. The Minister of Finance and Coordinating Minister of the Economy, Mr. Wale Edun, the Governor of the Central Bank of Nigeria, Mr. Olayemi Cardoso, the Governor of Bauchi State, His Excellency Governor Bala Muhammad. We also had, from the private sector side, Ms. Amal Hassan, who is the CEO of Outsource Global. She's a technopreneur. We also had Dr. Ndiamit Gill, who, of course, in the last few days, his speech at the NESG has sparked important conversations on ease, controversy, and I tried to address it too during the panel. Dr. Ndiamit Diop, of course, the country director. So let me just hold my fire now, take a listen to the panel session, and I'll be right back. Okay, so I think we should just delve right in. And my first question will be going to the Honorable Minister of Finance and Coordinator of the Economy. The report, of course, talks about the significant strides that the country has made on the macroeconomic front. But it also highlighted that macroeconomic stability isn't enough. We need to create more jobs, especially for our young people, like I mentioned earlier. And that requires an environment, a friendly environment for businesses that will create jobs for our young people. So as Coordinating Minister of the Economy, I want to know what steps the government is taking to make Nigeria a more business-friendly space, especially for companies looking to grow and create the much-needed jobs. In terms of how much oversight are you having as the coordinator of the economy? Because it's not just about macroeconomic stability. What are you doing with your other colleagues that are ministers, trade and investment, and all other ministers in terms of coordinating the space to create jobs and catalyze growth in their sectors? Then the other question also for you, because I want to make this panel session as quick as possible, is we've seen the big shifts in the petrol market. And this is an opportunity for me to ask that question, starting with the president's announcement last year. And we also got announcement that marketers can now buy PMS directly from local refineries. Many Nigerians are wondering about the cost of petrol. I'd like you to clarify the current policy around pricing of petrol and if PMS pricing is now fully deregulated. So over to you, sir.
Thank you very much, Nancy. May I say, Honorable Minister for Budget and Economic Planning, Governor of Central Bank, Deputy Governor of Central Bank, His Excellency, the Executive Governor of Bauchi State, the Senior Vice President and Global Economist at the World Bank, Dr. Gill, country director, and indeed all from the World Bank here today, distinguished ladies and gentlemen, gentlemen of the press. It's an honor, it's a pleasure once again to be part of this all-important dialogue with the World Bank. It's an update on our economy. And let me start by saying, was it 6 months ago or so, we talked about turning the corner. Clearly, the corner has been turned. When you look at the figures, what has been done in terms of monetary policy by the governor of central bank, ably assisted, I may say, by the fiscal side, coping with those heightened interest rates, all in a bid to get the economy stable, to get the exchange rate stable, to get foreign exchange into the system. That has been done. And now we are looking at staying the course. And of course, any effort that you do not sustain is a waste. And in terms of staying the course, let me borrow a leaf from Alex of the World Bank. And he said, look, let me for a moment speak from the heart. How do you stay the course? Will it be easy? No. Does it take effort? Yes. What kind of commitment does it take? At 5:30 yesterday, the governor of the central bank, the minister for budget and economic planning, and another senior official, and we sat down to look at how to stay the course, how to rein in inflation, and where were growth and jobs at the light at the end of the tunnel. At 6:30, we broke for Maghrib prayers. About 5 to 7, we sat down again. That's the commitment, that's the coordination, the collaboration, and consultation with which, those are the pillars with which we are dealing with and tackling this issue. Not so much now of getting economy stable, but maintaining, keeping a rein on inflation and simultaneously getting growth going. Because that's where the jobs are. It's when, and it's investment. It's when you have investment that you have increased productivity that will give you the growth of the economy, that will create the jobs you are talking about, and of course, reduce poverty. So that's the trajectory we are on. How do we get that investment going? Having stabilized to an extent the economy, inflation relatively stable, the exchange rate stable, then the budget deficit down, the trade balance positive and growing. After that, you need the growth, and it will come from agriculture, agro-industrial development zones. At the first instance, we sat down this morning once again to put the final figures as I coordinated agriculture, Ministry of Agriculture, the African Development Bank, and of course the Ministry of Finance, amongst others, to look at what are the figures for the dry season harvest. How many, the 400,000 farmers that we've identified, the 400,000 hectares that they will plant, the roughly 1.2, 1.3, 1.4 million metric tons of grains that they will produce. And then what is the wet season harvest doing now? Prices are coming down. That's the report we had this morning in terms of that this is harvest time and food prices, grain prices are coming down. Secondly, the oil and gas sector. You have Olu Verheyen here, the special advisor to the president on energy. In the oil and gas sector, the reforms, the fiscal incentives, and the improvement has meant Total Energies $3 billion investment. I think it was at Onga, $10 billion of investment by ExxonMobil was announced. It's cause and effect. Similarly, in manufacturing, of course, we have an accelerated stabilization and actualization plan, which we'll give you a copy. We're about to send out the soft copies to people. because it will be updated, and this is just the first iteration of it. And it states clearly, particularly for the manufacturing sector, what can be done in terms of concessional interest rates and other incentives. We have the Fiscal Policy and Tax Reform Committee chairman here to say what's being done. And what's the result? On Saturday, I sat down with a major investor who produces from raw materials finished goods. He said he's coming in with $1.2 billion worth of investment. He wants access to the 9% funding. We had Mr. Jamie Dimon, the CEO of JP Morgan Chase. They don't come any bigger. They don't come any more elite than that. And he talked about looking at what he could do in Nigeria. And the message he's going back with is a very, very positive one. That's as big. It's a big deal in terms of it is when major investors come and see and advocate that you get others coming. So if Jeremy Diamond was going there, you people get on a plane and go there. Finally, so I've talked about agriculture for jobs. I've talked about oil and gas sector for jobs. I've talked about growth in the manufacturing sector for jobs. And then housing and real estate. We do have, and we are going to roll out mortgages, long-term, 25 years, 20-year mortgages at relatively low interest rates, near single-digit interest rates by blending funds. And one key source is that we have long-term funds in this economy. We have pension savings in this economy. We have life insurance savings in this economy. That money is long-term funding that can help to create a mortgage market and a construction boom in housing. So that's where the jobs will come from. Thank you.
Okay, Honorable Minister, my other question around the petrol pricing. If the market is fully deregulated now, because there's still a lot of confusion if subsidy will come in or if it's totally gone.
I think, we've all, it's a family meeting. So many people here were the economic summit, Nigerian Economic Summit, and we've heard so many things, but essentially the key thing here is that for the first time in 40 years, the vexed issue of fuel subsidy and linked to it the foreign exchange subsidy costing 5% of GDP has gone. It takes time to do reforms. So what started on May 29, 2023, was taken from one place, tried to rear its head in another place, and it is finally extinguished. We have market pricing of PMS. And with that, there's huge benefit not only to NNPC, which was bearing the brunt, but to the economy as a whole, including the state governments and the local governments. It is market pricing. In the same way you have market pricing of foreign exchange. And it's a difficult step, apart from all the other things that you do to ameliorate the pain generally of macroeconomic reform. In this case, we sat down with the unions yesterday. We explained the economic trajectory the country was on, and we explained the opportunity which we all needed to ensure that we do not miss. Curtailing inflation, getting the economy growing again, repairing a trillions hole. I mean, you can work out the figure yourself. When you lose 5% of GDP, I think Dr. Gale said it all the other day. But if you imagine that we now have those funds back each month, each day, with market pricing of PMS, the government has money at the federal, state, and private levels, and local government levels for education, for housing, for infrastructure. It is a very, very significant point. And it's President Bola Ahmed Tinubu that's been able to do it in 40 years.
Okay.
Thank you.
All right. I think it will be appropriate for me to go to the monetary policy side. So my next question will be to Governor Olayemi Cardoso. The report has clearly highlighted CBN's recent monetary and exchange rates reforms and stressing the importance of staying the path. It also suggests some key areas for you to focus on. For example, avoiding deficit monetization, improving the transparency of the CBN's balance sheet, and maintaining a market-driven exchange rate, even though a lot of people are saying market-driven exchange rate when Nigeria is not an export-driven economy, as it were, apart from oil. So how is the central bank, as the anchor monetary policy organ, approaching these issues to ensure long-term stability and growth? Governor Cardoso.
Thank you. If I may stand on existing protocols, just so I don't lose track, I think I would like to speak to the last comment you made about the fact that you spoke about the exchange rate and the fact that to the extent that we do not export and all we export is oil, then what's the benefit of having the exchange rate where it is? And I think the answer to that, quite frankly, is that it should encourage exports. It should encourage exports. And if you look at the competitiveness of our products as a result of exchange rate having moderated the way it has, you'll see that our goods will definitely become a lot more competitive. And I believe also it discourages, rightly too, it discourages excessive imports that we really don't need, and for so long we haven't needed. So by virtue of the moderation in foreign exchange, it does things that it helps to direct your preferences, and it helps to make choices for us that we perhaps should have made earlier. So I just thought it was important to talk about that. You said something earlier, Nancy, about orthodox monetary policy. Yes. And obviously that is something that I talk about consistently, that it is important that the central bank keeps its focus on orthodox monetary policy and stays away as much as possible and stays away from quasi-fiscal intervention. And to be honest, if you read this report, and I must commend the World Bank and those that collaborated on putting it together, the numbers say it all. The numbers say it all. 10.8 is our estimate of interventions that we met. That is our own estimate. And much as we say that we will not be doing any interventions, and I've said this publicly a number of times, and I will continue to say it. And there are two aspects to it. One is that there are some interventions which are in various stages of completion. The idea is not to abandon those. There are some, it just won't make any sense. So there will be some commitment going forward at some stage to at least finding a way to complete them. There will be some dialogue around that. Right now, what we're doing, quite frankly, is trying to get hold of the various major interventions that have taken place. And I think, as I said, some reference is made to that in the MDU. So ours will be to continue orthodox monetary policy and using our tools to ensure that we can bring price stability to our economy. And so far, so good. We intend to keep it that way. Our current monetary stance is definitely a tight one. And yes, it may appear in some cases a little bit on the hawkish side. And I want to make reference to the very last MPC that we had. You know, at that time, the expectation was that the central bank or the Monetary Policy Committee would not touch interest rates, at the very least, would not touch interest rates. But the Monetary Policy Committee, in their wisdom, unanimously decided to take up interest rates. Unanimously decided to take up interest rates. And by 0.5%. And basically, why did they do that? And I would encourage people to read the various statements of the MPC members, which are published. Truth of the matter is that if we didn't take the preemptive step of doing what we did then, with what we are seeing playing out right now, I can assure you it would be a lot worse. Yes, inflation has gone up a little bit. It has. But we had projected, looking ahead, that this was going to happen and that it was important for us to be timely enough and take the preemptive step to minimize the impact of, for example, the pump price and a whole host of other issues that we saw. This strategy, of course, is designed to continue to manage and curb inflation, because to us, that is the monster that we really must bring under control. And our expectation is that in spite of the increase you've seen, the slight increase you've seen in inflation, we are positive that there are likely to be better outcomes in the future. Additionally, of course, ways and means, and this is something that, again, was spoken about extensively in the report, and we had said from the beginning that we would exit ways and means. And I'm very pleased that the Honorable Minister of Finance himself and the coordinating minister has made that statement public that, from their perspective, from the fiscal perspective, that is not a source of funding that they'll be looking to go to. And frankly, the numbers are there again, which indicates that we have exited that particular source of funding. Again, a lot of commentary in the report, and I would again encourage people to read those things because they do tell a very, very, very interesting story about, the road of travel with respect to money and money supply up to this point in time. And then finally, I think something that I think is very, very important. For many of you, or for those of you who may have seen my address at the time that I went for the Senate clearance, I did say that we would move towards an evidence-based central bank. An evidence, in other words, policies and decisions will be based on evidence, on data. And really, I'm pleased that we have moved a long way in doing this. And I'm also very happy to see the report today and to see the numerous data that came out, which tell a huge story. Also, at the economic summit, I commended the NESG for the work they have done. And I would just encourage all of us, that we should take advantage of such data. We should take advantage of it, because if you don't have that access, in many respects, you could be taking decisions, and I'm not necessarily talking about central bank, I'm talking about policymakers, I'm talking about people in the room, I'm talking about people who are interested in the economy of our country. And if you don't have access to this kind of data, which is reliable, has been well sourced, and if you want to dispute it, you're always open and welcome to do so. We, for example, at the central bank, we've at a point in time, we stopped producing certain kinds of of materials. We've gone back to doing that because we think it's very important to send all those things out to the public so they can download them and they can read them. It is so important because if you look at some of the data that has come out and some of the statistics that has been shown, some of the warning signals were there much earlier. And perhaps if they'd been taken a lot more seriously, okay, the quantum of the problems may have been more moderated. So I'm not here to talk too much about the past, but to just say that going forward, it is something that we certainly would embrace, and I'd also encourage everybody who is interested in the way the economy develops and the challenges that are being faced to embrace the same. Thank you very much.
Thank you very much, Governor Cardoso. Governor Bala Mohammed, with petrol subsidy ending, of course, we've heard from the Minister of Finance and Coordinating Minister of the Economy, as well as the Central Bank Governor, the liberalized foreign exchange rates, tighter monetary policies. Many households and businesses are feeling the strain, even though Governor Cardoso has told us here that inflation is the big elephant in the room that we should chase, because inflation is a thief, whether for poor households or rich people. The federal government has responded with initiatives like minimum wage increase. I would like to know what you're doing in your state. Some states have had, I think, 77,000, 85,000, I think Lagos. I would like to know how much your own minimum wage is. And initiatives like cash transfer from the government. So how are states like yours, Bauchi State, working alongside with the federal government on these efforts? And what efforts are you really putting in place to alleviate the burden of the pressure on citizens? Like I mentioned earlier, Nigerians are suffering. It's not about us wearing suits and beautiful kaftans in this room. There are millions of households that are suffering. So Governor Mohammed, now not Governor of Central Bank.
Thank you. Thank you, Nancy. And I want to also go on the established protocol established here. I want to thank the World Bank for inviting me, the only governor here. I hope I'm not the big elephant in the room because I can see the way the discussion is going.
You only need one governor.
Thank you, the Vice President of the World Bank. I listened with rapt attention the presentation of the World Bank report. And I think the World Bank is very, very generous, very diplomatic, as it is on the issue. Coming from the subnational, I know we are part of the federation, and macroeconomic policies are normally under the auspices or under the purview of the federal government. We don't determine policies. We are just players and partners in governance. But certainly it is good, and I appreciate that I'm invited here, so that you will know the other side of the story. Yes, when the reform was started, the subnationals really, really supported Mr. President and the presidency because we knew that we had to do something. And there were two things: subsidy removal and deregulation, which would bring more revenues, which will make us run away from the obnoxious policy of patronage, of arbitrariness, and so on and so forth. Governor Cardoso has spoken about the orthodox system. Yes, we can go through the orthodox system to achieve economic growth. Are we achieving them? Yes, he spoke about inflation. That means the macroeconomic policies that are creating inflation should be looked into. He said we'll be transparent, to match things transparently with what is on the ground. I want to say with humility that there is a lot of pain, a lot of hardship that is beyond the subnationals. we didn't bring these policies. The revenues that are coming are not enough to address the cost of infrastructure, to develop or improve livelihood. There is hunger. The policies on agriculture, on manufacturing, and so on and so on, are not yielding the required fruits. And I believe Mr. President is a president for everybody. We should not be dogmatic and stand on the path of policy and academics. I find the report too academic. We should go back to the basics. Nigerians are not enjoying the regime and the time across the board, not only the federal government, including the states and local governments. Therefore, the onus rests on you, Honorable Minister of Finance, and the managers of the economy, and my friend Bagudu here for planning. Come up with budget program with economic policies that will reduce hardship. The money that we are sharing, as alluded by Nancy, is not enough. How much are we getting before? We spoke about the past, the use of ways and means. Yes, it's good to exit from that policy. But then, what are you doing to make sure there is less anger? You have seen what the labor is doing. The report spoke about employment, wages. How many percent of Nigerians are even employed? Most of our people live in the informal sector, World Bank. You should look at how we can make them self-employed. That's how we are living. On somebody that is selling suya, in my place, masa, a cake in the morning, but they cannot even buy. The purchasing power has dwindled beyond your imagination. Yes, we need the reform. One of the lead economists said there are this perception of compromise or conspiracy. Yes, that is it. But you have to do your job. I agree with you with all the numbers, all the data you doled out. But as I said before, Governor Cardoso, my elder brother, these policies are not working. Review them. Let us have food on the table. I know you have the capacity and the knowledge. We look up to you. States are loyal. We will follow you. But please, let us not go into blackmail, where we will seem to be collecting money and doing nothing. Yes, we will implement the minimum wage, which you agreed. But what is the volume of revenue we are getting? Can we do it? And if we do it, do we have anything left for infrastructure? What about power? The tariff is beyond the reach of the common man. We are living with these people. We are at the risk of being lynched. Let us not stay in Abuja and be talking that the reforms are working. With all humility and modesty, they are not. Thank you.
Okay. Governor, you've sparked an important conversation, and I know that if I want to interrogate further, we won't leave here today. But you've still not answered around what are you paying? What's your own minimum
Yes,
wage?
but
the other question, Governor, sorry, Governor, let me add this, is also you're saying the reforms are not working, but you're getting billions
how
in your
much
state.
are we getting?
No,
Nancy, don't go by that narrative, please.
No, Governor, hold on. Let me just land.
Yes.
The allocations you're getting now is more than what you were
Yes,
getting
it is.
before. I'm a numbers person, Governor,
Okay.
so I understand it. But the issue now is that citizens are saying, with even the little you say you are getting now, how are you spending it? So those are the two questions. What are you paying
Nobody
now
has
for
asked the federal government how they are spending the much money they are getting.
Governor, you are closest to the people.
Yes, we are. Has anybody from my state complained that he's not being paid?
So how much are you paying?
Excuse me. We are doing projects and programs, and we don't need the permission of the federal government to do it. We are a federation place. I said we should not go into blackmail because this thing sparks of something else. I have been paying minimum wage even when it was done before. Now we are looking at our revenue. Everything should be done scientifically. to see that we can pay, if we can afford the 7,000. We may not, but some states can afford, because not all the states are the same. I cannot compare myself with Lagos or Rivers, but certainly I'm a realist, as the governor of CBN has said. We will do it based on what is on the ground.
So you've not come up with a figure yet?
No, we have not agreed on the figure, but we have a committee that's looking at it. But we are paying the all minimum wage. And then, of course, we are doing it religiously. But certainly, since the big brother has agreed on the minimum wage, we will work towards paying it as soon as possible. Thank you.
Okay, thank you, Governor. All right, let me move over to the private sector person here in our midst. I'm also private sector anyway. So Outsource Global has done an incredible job. That's your company, creating graduate jobs for young Nigerians, connecting them to global opportunities. What have been the key challenges you faced along the way? And in your view, what needs to happen to companies like yours to scale up and even create more job opportunities for the country's young professionals? You heard earlier when we talked about 12 million people that will be put into the labor market. I don't know if you still have allowance to get more people from that 12 million people. So policymakers are here. Speak to Governor Cardoso, speak to Minister of Finance. What are the things that are needed?
Thank you very much. Good morning, everyone. Still morning, right? Yeah, it is. Please permit me to write on existing protocol. Thank you very much for having me. It's really an honor to be here today. Alex, when he was making his presentation today, he said Nigeria has something to offer that the rest of the world needs, right? It is not oil. It is not just oil. Nigeria has over 200 million people. 60% of this 200 million are youth. We graduate 1 million and above graduates every year with different skill sets. We graduate lawyers, accountants, and all that. We talk about JAPA, and we don't see the effect or the positive side of JAPA. What JAPA means is, am I saying it correctly? JAPA. Yes. So what JAPA means is Nigerians, despite the education sector, despite the yeah. So Nigeria, despite the education and the shortcomings that we hear every day regarding the education, people are japaring, people are getting jobs outside the country. What we need to focus on, and since we have all our leaders here, is job creation, and we've all mentioned it today. And we are not going to go back to the challenges, and let's focus on what needs to be done, right? We are a company we've created over 5,000 jobs. We started in 2016, and today we have over 2,000 employees permanently. And majority of those employees are providing services for companies in the US, UK, Japan, and Europe. And we are taking graduates directly from the universities and upskilling them to be able to serve the international market. How do we replicate that? When you look at the BPO industry in India, it contributes to over $400 billion. We have an issue of forex, inflation is rising, infrastructure deficit, and all that. But we have our biggest asset. Before agriculture takes shape, before we start feeling the impact of all the work that has been done through the agricultural policies and other policies, we have readily available talent. 1 million graduates, 12 million I heard today, going into the workforce. What do we need to do to export the service of those talents. What are the things that we need to put in place? One is when we recruit people in Outsource Global, our company, we upskill them. If they're lawyers, we look at the needs of America, which is our biggest market, and upskill them based on the needs of those markets. It takes 6 weeks to 3 months to do the upskilling. What do we need to do to look at the demand side and fill the gap between the demand and supply? And that's what we need to do, is really what I feel is the low-hanging fruit. If you look at service sector today, it contributes greatly to the GDP of this country. If you look at the adaptability of technology and the amount of investment that we've gotten in Africa, Nigeria experienced more than 70% of the investment in tech that comes into Africa. It means that's what we do well. So what do we need to do? This year, early this year, we introduced, working with this administration through the VP's office, we introduced Outsource to Nigeria initiative. What we've done is we look at how to get BPOs into the country, how to promote both the BPO and tech sector. How do we get people to come into the country? How do we get companies to come into the country and recruit from the country while they remain in the country? So, of course, companies do not want to invest in Nigeria. I don't want to dwell on those challenges, right? But how do you create infrastructure around Nigeria, readily available infrastructure for them to come and plug and play? That's one of the things we looked at using Outsource to Nigeria initiative. The second thing we looked at is upskilling based on the different skill set that is required by international market. Lawyers, accountants, software, customer service representatives, software engineers. And I'm happy to say that we launched a pilot with just 500. Within 3 months, all of them were outsourced. All of them were outsourced. So it means we have something to offer, right? So how do we look at what is working? The fintech industry is working. The technology, a lot of the technology companies are working despite the challenges. We're facing inflation, we're facing high cost of operations, but because we are exporting service and we're earning Forex, we're able to meet up. Despite that, our margin is closing every day with the rise of inflation, but we're still employing those people. We're still expanding. We have seen that whenever the country is called internationally, there is that negative feeling of Nigeria as a brand. But why is it that it does not apply when it comes to recruitment? People are japaring in millions. Why does it not apply when it comes? It means that the world knows that our talent is good. What we have is very good. They don't want to come into the country. What do we need to do to make sure that we de-risk their coming into the country? What do we need to do to get our graduates ready to be employed? I hear this every day and I keep correcting it. Nigeria, where's the skill set? The skill set is there. It takes very little to train our skill set to be able to serve the international market. I was born and brought up in Kano. I always say that. I like to say that. It's beside the point. I grew up in Kano. I schooled in Kano from primary to university. And I started my first business with an IT training center. I'm an average Nigerian. And this is our biggest asset. If we focus on this in the next 5 years, everything will change. That's my thought.
Thank you very much. Dr. Gill, your last few days in Nigeria has been very eventful. You've been on major media stations, mine inclusive, quoted as saying that Nigeria will need to stay the course for the next 10 to 15 years. And people are interpreting it that is 10 to 15 years of suffering. But you mentioned that the recent reforms should focus on three areas in particular, of course, non-oil growth, helping vulnerable households cope with inflation, and establish a climate where private businesses thrive, like Madam Hassan just mentioned earlier. So please, can you use this platform to clarify what you mean, and as well as elaborate on some of the suggestions you made at the summit, and perhaps share examples of countries where these reforms have worked? Because some critics have actually also said that we should Nigerianize our solutions. Let me speak that English so that people understand. Alex earlier on did say, of course, the World Bank is not being looked at with a friendly eye, or perhaps the Bretton Woods institutions, let me put it that way. So share with us some examples where these recent reforms have worked and the countries are still standing and doing well.
Got it. Very good. I think it's a very good question. It's also a very difficult question. Good questions are usually difficult questions. So I actually feel like the fifth wheel on this one. Actually, you only need 4 wheels to make this car run. To try to answer your question and to actually reflect back on my 3 days here, because it's been a whirlwind. I've gone to 4 countries recently. One is Malaysia, Indonesia, Ghana, and this is the 4th one, Nigeria. And if I had to say at the end of the trip, which country am I leaving the most encouraged by, I am most encouraged by my trip in Nigeria. And I don't say this everywhere, I'm most encouraged, but I leave here with a mix of hope and fear. The hope is because you see the potential, and the fear is that you feel like this potential will not be realized, So I leave with that mix. The point, so what is it? What's the sort of blend of reforms that works? Again, we've been talking about this amongst colleagues, with Alex, with Brian, with Njame and others. And I think that the governor put his finger on it. I'm talking about the governor of the central bank now. He said, there's orthodox monetary policy. Let him carry out orthodox monetary policy. I could not agree more. I think that when it comes to I think that we should also let the finance minister carry out orthodox fiscal policy. Okay? Now, there are other policies. There's an investment policy and there's social policy. On those things, you can experiment within reason. But these two, don't experiment. It's fairly clear-cut what works. That is the answer to your question. What is it that works? And if you look, for example, at a country like India, which is my country, I find that what has happened is since 1991, when we had a terrible crisis and we went to the IMF, and it was humiliating. I was not that old at that time, and I was humiliated. I was not even in India. I was in the United States at the time, and I was humiliated by that. And basically what happened was after that, we did what the governor said, orthodox monetary policy. All the parties agree on that. Relatively orthodox fiscal policy. Both the parties agree on it. You will not see these parties, you will not see politics destabilizing the macro. They argue about other things. And that's a healthy argument. I saw some of that argument over here. I saw the governor saying that, look, we are not getting enough from the federal government. We are not, that to me is an encouraging argument. It's not an unhealthy argument. It's a good one. Okay, so now, when I met the Minister of the Coordinating Economy, I spoke with him yesterday, and I asked him, can you summarize all of your, what are you trying to do here? And he summarized it very, very well, okay? I'm going to try to replicate it. He said the first one, he said the reforms were unavoidable. And they were unavoidable. I was recently reading an article I think it was in Business Day, which talked about subsidies and suffering. Okay, so that was what it was: subsidies and suffering. So because of that, there was no choice. I don't think that the president had a choice. He had to do this, and I think it's good that he's doing it. The second one is that these reforms must end the obsession with oil. Okay? They must end the obsession. Nigeria is too good to depend so much on this one commodity. It's just too good, and especially because you have 110 young people, 110 million young people. I mean, I always heard about the golden eagles. You got 110 million golden eaglets. They can fly a long way. They can fly. They can take everybody else with them. The third thing is so here's where perhaps I disagree with Governor Bola a little bit here. The reforms are showing success, Governor. They are showing success. I mean, you can see it. Sometimes you need to see it from far away to see that, because you're too close and you're a big part of the economy here. But sometimes you have to see it from far away and you start to sort of see some success. That was the third point that was the third point that the Minister of Finance made. The fourth point he said was they have to be speeded up. The reforms have to be speeded up. And then the fifth point he made was these reforms require teamwork. So first one, they were unavoidable. Second one, they must end obsession with oil. Third one, they're showing success. Fourth one, they have to be speeded up. The fifth one is they require teamwork. I'll say a little bit about each, and then I will turn it back to you. So in terms of, it was unavoidable because this mixture of subsidies and suffering is absolutely unavoidable. I mean, so it is absolutely unsustainable. You cannot continue if you don't have money, and you should not continue if this leads to suffering, right? It had created a very undiversified economy, and it had made the society rent-seeking, the entire society, everybody. So it had to stop there. The second one is the reforms must ensure that all resources are used in ways that benefit everyone. It must bring out Nigeria's best. Okay? You cannot focus so much on the oil sector. Nigeria's potential in agriculture, services, and industry cannot be suppressed. Okay? And it had been suppressed until now, and it was in large part because of the exchange rate, in large part because of the corrosive effect of oil, because it actually permeates into every part of society. So what do you have to do now? I think that the governor of the central bank has given us a start. So as I was listening to them, I was thinking about an analogy. What analogy would I use? I would use a car analogy. I'm a car guy, right? And every car has like 4 wheels, almost all of them. And one tire has been reinflated, the monetary tire. But now the fiscal tire has to be reinflated. The social tire has to be reinflated. And the investment tire has to be reinflated. So I think it's right that the economy has turned the corner, but it has turned the corner with three deflated tires. This is not going to go very far with that. Okay? So what does one have to do? On the fiscal tire, there has to be a reallocation to the development priorities. And I think the governors are important here. I'm talking about the state governors. They are very important here. The Minister of the Economy is very, very important here. So the long-term agenda there, of course, is infrastructure. The short-term agenda is education, a massive amount of education. Medium term, it has to be agriculture, exactly as the minister said. But then it comes to the short term. In the short term, that is the second tire, which is the social protection tire. You have to help the poor. It cannot be that you wait until the economy thing. We talk about the reforms trickling down. That trickle has to become a flood. It has to become a flood quickly. And then, of course, at the end of it, it's private enterprise that will actually take things. So that tire has to be there. Now, when I was thinking about, okay, in all of these tires, where is the World Bank? And the World Bank is the spare tire. And Nigeria has too good a car. And I think once the other tires are working, it doesn't need a full-size spare, okay? So you just need a small size spare. And we'll be that. We can be that small size spare, right? But I think that on the fourth tier, which is the enterprise tier, it has to be much more economic freedom. And that economic freedom has to start by the finance ministry not sucking up all of the finance from local enterprise. It cannot crowd out private enterprise. It should not be borrowing that money. It should balance its books. Okay, it has enough money now. It should balance its books. Then the second thing, of course, it has to do is, because all of the things that you mentioned, what does Nigeria offer the world and so on? It has to be much more open to the world. There has to be much more economic freedom. And that economic freedom should extend to what my colleague Ert said, that you should invest so much in education that you have so many skilled workers that you don't care where they work. They could work in other countries, they could work here, it doesn't matter. They could work in other parts of Africa, it doesn't matter, because you know from the experience of India and China and other that the diaspora comes back when things start to look good. It comes back. The magnet, it's too strong a magnet. You always come back. The part about, again, I won't go into the showing success because my colleague actually showed that. You look at the growth of the non-oil sector. Just look at that. If you start to sort of see, don't just look at the aggregate growth rate of the Nigerian economy. Look at that. Look at the difference in, look at the sources. How much of the sources are non-oil? How much of the sources are oil? If that is changing in the right direction, it doesn't have to change every year. But if that is changing in the right direction after 3-4 years, you know that the reforms are success. To go back to your point about what people being discouraged, saying you have to stick this out for 10, 15 years. Yes, you have to stick it out for 10, 15 years to make the reform stick. Otherwise, you go back to things. Otherwise, these tires deflate, right? But they start to show, the car starts to speed up. It starts to go in the right direction very, very quickly. You don't have to wait. You don't have to go into a ditch for 10 years and then come out in the 11th. No, you'll actually find that you're going along the right road, but you have to. So the reforms, and for a big country like Nigeria, for a big country, a potentially big economy, the reforms will come quicker. A smaller country has a harder time. A bigger country attracts attention. Good things that happen. And here's one of the nice things about doing these things, and this is the reason why I'm so encouraged over here. You find that in Nigeria, there's this effort to improve the economy right now. There is this desire to improve the economy. It is relatively rare. I mean, at the World Bank, we talk about every success, everything. The reason why we wrote an article in the FT, in the Financial Times yesterday, was because, and the reason why they wrote it up for us is because it's a rare sign of success. Everybody gets encouraged when they hear a good story. Nigeria is today a good story. But that's the reason why I'm so scared that this good story can become a not so good story. So now, to actually come back to the teamwork part, this requires teamwork. And the teamwork has to be, there has to be so much coordination between the central bank governor, between the Minister of the Economy, between the Minister of Finance, and the state governors. There has to be so much coordination that people don't see any daylight between them, right? Of course, they'll have fights between them, and they should, right? And sometimes those fights should spill out in the public. That's fine too. It's good. It's good to sort of see good teamwork. Occasionally, good teamwork, good teammates challenge each other on the field too, not just behind. They don't have to challenge each other just in the locker room. But we know that they challenge each other in the locker room a lot more than they do on the field, right? So that's my takeaway. I think it's a very critical point. But everybody's rooting for Nigeria. There's one. If you're playing Germany today, nobody's rooting for Germany today. Even the Germans are rooting for Nigeria. Yes.
Dr. Gill, the countries, I'll give you examples of countries where,
So I thought I gave you countries.
You just said India.
I said, well, India is a big country. Yeah. Now, if you look at some, so I find, for example, take the case of Indonesia. Until today, so India, Indonesia, Vietnam, and a few other countries are growing very fast. Indonesia, ma'am, the orthodox monetary policy, orthodox fiscal policy. We actually have a finance minister there until the end of this month, who has been, I think she has been voted Finance Minister of the Year 7 times. Okay, and she has had to fight this with her president, with her colleagues, including the Minister of Defense, who's now the president. Okay, yeah, it's important not to fight with the Minister of Defense. Yes, but I think you have to fight with everybody. That's the other example. Now I can give you some more, but they end up being a lot more in Asia because there is a sense of urgency there. And what I heard here was a sense of urgency. And I heard it for the first time. I did not hear it in Malaysia, and I did not hear it in Ghana either. Okay, so I'm hearing it over here. I know that my Ghanaian colleagues are going to yell at me for this, but it's true. Yeah, and by the way, it's very easy to tell when I'm lying. So I speak with a stutter. When I lie, I stutter a lot. Yeah. Did I lie? I did not lie with you today. I did not stutter even a little. Yes, ma'am.
Thank you very much. Well, thank you all for joining us today. Thank you, as always, for your company. I am Nancy Naji. Be the best you can be, and be that change that you want to see. Bye now. Thank you for making it up to this minute watching the video. Thank you all. Don't forget to subscribe to our YouTube channel, Moneyline with Nancy TV. Like, follow all our other social media platforms where we keep you up to speed with fantastic interviews, as well as markets, personal finance, business, and economy information. This is the best place to be. I'll see you all again in the next video.